We made a 295% profit on our Baidu trade as the stock hit a new high from those unusual options that expired on Friday, September 19th. And so, if you've been following our work or subscribed to our channel, you'll know that on this day, May 7th, we detected an unusual trade placed by a wealthy investor. This was the video that we shared on our channel about 4 months ago, analyzing a $4.2 million options trade to help determine whether to buy Baidu stock. And after analyzing the data, it was clearly flashing a buy signal, indicating a potential opportunity. So we entered our bullish trade based on our analysis, and as it turns out, that analysis was correct and highly profitable because Baidu stock is now trading much higher at new highs, so that trade has paid off big. If you want to learn how we predicted this, we'll link this video at the top. Make sure to subscribe and hit the notification bell so you don't miss out on these very profitable opportunities. Now, how much profit do we actually make from this trade? Well, if we had simply bought the stock by using shares, we'd be looking at a solid 56% gain. But since we used call options instead of just buying shares, our profits were even higher, thanks to the leverage that options provide to amplify returns, capturing even bigger gains. So if we take a look at our original video, when we first detected those unusual options back in May, you can see here, we were analyzing these September 19 options at the 80 strike calls, priced at $1,400 per contract when we entered this trade. And remember, this shows options prices, so we either move the decimal 2 places to the right or multiply by 100 since each option contract controls 100 shares of stock. That means each option contract initially cost $1,400. So let's check how much our options ended up being worth, the same one bought by this wealthy investor. This is the historical data from September 19th, the day those unusual options expired. And so looking at the September 19 options at the 80 strike calls, we can see that our options were worth between a bid-ask price of $5,500 to $5,640 compared to just $1,400 when we entered this trade. That's why it turned into such a profitable trade. So what was our return on investment? Well, this was our original analysis using the risk profile graph when we entered our trade for these September 19 options at the 80 strike calls, which are not traded anymore because they've expired. And so on this graph, our profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Keep in mind, this graph already includes the cost of the trade. That's why you can see on the blue line that if the stock had dropped down, it would have been a negative $1,400 loss, the entire cost of the trade when we entered. But instead, it went higher to about here. So we have a profit of $4,141 per contract. And so to calculate the profit percentage, we take the profit of $4,141 and divide it by the initial cost of $1,400 and then multiply by 100 to express it as a percentage, and that gives us a return of 295% profit. And remember, the stock itself only gained about 56%, but by using options instead of just buying shares, we turned that into nearly 300% profit. That's more than 5 times the stock's move. That's the power of options. But remember, this winning trade was only possible because we followed that wealthy investor early, back on this day when the stock was lower. So if you missed our original analysis, we'll link that video here so you can see exactly why we entered this trade before the stock surged to new highs. And head over to our website here. if you want deep insights like this, because the next time a wealthy investor makes an unusual trade, you'll want to be in early, not chasing. After all, if the rich get richer, why shouldn't you? Take care and have a wonderful day.